It's been a while since I've done this, but I really want to do this again. Give me a second. Welcome back to Closing Bell on Family Investment, and today I want to share with you why the market is falling, and I just want to tell you guys to hold your cash. Data is king, cash is also king, but don't get too excited buying the dip just now, because there are 5 key valid earnings point that I want to showcase to you on how you can make the decision when and where or what to buy with your hard-earned cash, because the market is very uncertain. Everybody is waiting for something to happen, and they're all waiting for data. I know end of the month you're going to see Jerome Powell doing his FOMC meeting to get more data on the global market in America, the interest rate, where he's going to hike it, but as retail investors, we can get ahead of the game, and this is why I'm giving you 5 key points of what you need to watch out for to get ahead of the game, and that's what I've been doing for this many years. But before I begin on the 5 key points, please remember to like and subscribe, and also share with a family member or a friend who might find it useful, because at the end of the day, we're all a community of family investors trying to share and showcase what we know in a community to help one another, so we can get ahead of the game to make the hard-earned cash work for us, so that one day we can send our kids to the best school that we want. So now on the 5 key points, very important. First one is the bank earnings, and guess what? The bank earnings just came out. Morgan Stanley, Goldman Sachs all came out missing earnings ratio, but not to worry. Stock is dead. Interest rates will help them. One key thing that I've listened through all the earnings is wages, staff retention has been on the rise. But a good thing is they spend money, retain the staff, kept them going, because they know they'll be making lots of money with the oil boom. So they spend the money up front, retain the staff, knowing the long-term future. So banks have told us one thing: wages increase. Smart people need to be paid more, despite the fact that inflation is going up, but they need to be paid, and they've done it, and they've done well. The second sector we need to watch out for is Adobe and Netflix. You're wondering, Alex, why Adobe and Netflix? How is it important? I don't care about Netflix no more. It's important because we need about data of human behavior online. Adobe tells us about the e-commerce, people spending online, buying online. And Netflix tells us about people staying at home, subscribing, so they do not want to go outside and spend money. They want to stay in, because what? It's expensive to go and eat. It's inflation. It's not just about Omicron, but it's about high increasing costs around the world. So Netflix, Adobe is key to look at behavior of people wanting to stay at home until everything is not just over, but until inflation hopefully comes back down again. And number 2, to see how people react outside the younger generation going out, we need to watch out for Amex, Visa, Airbnb, travel type stocks. This is important because it tells us about the younger generation wanting to spend money, willing to go splash, willing to travel, and as rising costs a concern to them, as wages and salaries and impact, will they get less money if they spend more? So this is the behavior that we need to watch, and only Amex, Visa, and Airbnb will tell us with the data they have on the earnings day to begin to craft the picture out to see whether 2022 is the year of that boom. And the next one, FANG stocks. Not just FANG, not just about revenue growth, but it's all about FANG and cloud infrastructure expansion. Mouthful: Apple, Amazon, Microsoft. Will they be spending more money? How is their infrastructure on the cloud computing expanding? We've got blockchain, we've got Web 3.0, we've got potentially 6G coming up. Are they coping? Are they going well? What do you mean by coping? Because remember, interest rates goes up, it's going to cost the profit margin, the gross margin decline, because cash flow will be lower. And if it's lower, are they willing to spend capex to expand further to keep up with disruptive technology change? If the answer is no, they want to keep the earnings high, to deliver their earnings to their shareholders, then they're not spending as much, they're trying to keep the growth. Or are they going to spend now, take the hit now, and potentially in the next 5-10 years, reap all the profits? And we have to see, these are the behavior we need to see from this cloud computing company, and I hope you're watching it very closely like an eagle. And the last one, number 5, very important. Everybody speaks about the rotation stocks. Everybody speaks about the oil boom. But until I see data from Caterpillar, Boeing, Lockheed Martin, Schlumberger, Halliburton, I will only make a decision. Why? We're going to see high revenue growth because of high demand. Are they keeping the staff? Are they retaining the expertise staff? Remember, loads of people are retiring lately. High orders. Are we keeping up with the demand? Are we keeping up with the workforce? That's one. if they're getting high revenue and they're paying so well, the profit margin, what we have, the net profit, will be smaller than what's expected. So are we really going to see your earnings per share go 30-40% in 2022, or is it going to be offset because of expenses going up? So keep an eye. If industrial cannot go more than 30-40%, why invest in industrial? I might as well keep my money in my tech disruptive stock. But then again, I need to watch out for number 4 as well. So just to general summarize, banks have been out, paid their wages, kept the people, great. Number 2, Netflix, Adobe, I need to see data on how the behavior of people at home, are they spending or are they going out? And number 3, if they're going out, we need to see how they spend in the cards, how they spend on Airbnb and travels. Are the young people going out splashing? They don't care about inflation. Is that the case? Are they keeping up with the Jones? That's what we need to watch. And number 4, cloud infrastructure expansion is key to everything just now. Are they spending to push disruptive technology further, or are they cutting back to please the shareholders? And number 5, industrials. Are the deal really, really good to tell us that they're going to give us the 30-40% boost for 2022? If not, I'm going to stick back to industrial. So that's my quick summary. I hope you find it useful. Please again, like and subscribe. Help me grow my channel. Help spread the word to other family members who will find this useful, because if you help them, it's going to be a good karma for you, an excuse for you to share. Thank you. Have a good day. Always feel free to come and join my Patreon. I'm very active on Patreon, trying to guide everybody and buy triggers and guide everybody what I do. Very, very personal approach. Or if not, you can always see me on Discord, which is free. Or if not, come back and watch my videos again. Thank you very much. Have a good day.
I hope you enjoyed that video. Check out our website link below. More videos up here.
Bye.
Bye.